Hey everyone, so in this video we'll look at the PSU Bank Nifty and we'll look at why exactly it is rallying, what are the fundamental triggers or what are the technical triggers, and is it a good time if you are someone who's sitting out, is it a good time to buy these Bank Nifty stocks, that is the PSU Bank Nifty stocks, and when would be the right time to get out of them. All that we'll look at in this particular video, right? So let's start with the Nifty PSU Bank Index. So this index kind of made a cup and handle pattern. As you can clearly see on the weekly charts, it made a cup and then it made a handle and then it kind of broke out around the 4,300 odd mark, right? After that it did a retest and now it is trying to cross the all-time high. So if you scroll back, you would see that in 2010, right, the PSU Bank Nifty had hit a level of 5,300, which is like the all-time high, and after that it never attempted. This is the first time after almost 13 odd years it is trying to hit that, right? So it is going to act like some resistance, maybe some pullback before it kind of finally crosses above that particular resistance. And usually when it crosses an all-time high, you see pretty solid returns for that particular index as well as the stocks in that particular index. Okay, so this is about the PSU Bank Nifty index. It looks extremely bullish. And if you look at which are the stocks that are there in that particular list, so you would see that the big names would be SBI, Canara, Bank of Baroda, Punjab National Bank, right? And the other small ones like IOB, UCO, Union Bank and all of that, right? So this particular index comprises of these stocks, right? And if you look at them on a valuation perspective, like whether, let's say we take the best out of it, that is SBI, the largest one, we compare it with a private sector bank to see what is actually driving these particular stocks. So if you look at SBI, it trades at something like 8 P, right? But P is not usually the matrix that most of the people follow. For banks, they look at price to book. So even if you look at price to book, it is like 1.5. The book value is 400 and the current price is 600. So price to book is somewhere around 1.5. Same way, if you look at the HDFC Bank, it trades at 18 P and it trades 2 times that of SBI when you compare it to price to book, right? 3.14. But there is a reason for this, right? So what exactly is the reason that these private banks trade at a premium compared to the PSU banks? So let's kind of look at the Bank Nifty index, okay, the private this thing, and then analyze what is the difference between the PSU Bank Nifty and the private sector ones, right? So if you look at the Bank Nifty, let's take from 2008-9, right? After the crash, Lehman Brothers, the collapse, right? So after that, if you see, the Nifty Bank is more of a linear chart in the sense there is hardly any deviation and almost like, let's say if you have a 3-4 year kind of a view, it is continuously moving up, right? You don't see huge deviation from this line that I've drawn, right? Only in COVID. So COVID was like once in a decade kind of a event that happened, right? So if you take that out, you would see that it is linearly moving along this particular line. Now let's look at the PSU Bank Index. So the PSU Bank Index, if you go back to, let's say, 2009. So after 2009, it went up, hit 5,300 from a level of 1,500. That is almost आपको 3.5 times profit mila, right? After that, huge fall from there to like 1,900, almost back to the same levels from where it started, right? 80% fall, correct? It went up 3.5x, 80% fall, again went up, correct? यहाँ से आप देखेंगे 2x and then again came back to the same level. So let's say I bought it at here, this level here, 2000. This came back to 2000, right? 1950. So basically, if I am a long-term investor in a Nifty PSU banking index stock, then I would probably not make great money in the long run, correct? Because what is happening is they move up, they come down, right? So this time I won't be surprised if the same thing happens. But the thing is, we can play it while it is moving up and exit as soon as we start seeing signs of it slowing down or reversing. Okay. So before going to when to sell these banking stocks, we'll kind of look at what is driving these stocks. Okay, first thing is the valuation. Like I told you, in case of SBI and HDFC, if you look at other stocks as well, like let's say Canara Bank, right? So even if you look at Canara Bank, the price to book is like 0.87. And one more very important trigger is low valuation combined with low free float. So how do you see free float? If you go down and see the shareholding pattern, so in that the promoters are holding 62, FIIs 8%, DIs are holding 15%, public is holding like 2%. And out of that, if you look at it, Mr. Junjunwala holds almost 2%. So net hardly like 10% is with the public, and 10% of, let's say, the whole banking, this thing is like 6,500 crores, right? Which is not much if the mutual funds also kind of jump in and start playing the PSU theme, which from the looks of it, they have already started doing it. Even something like Bank of Baroda, the shareholding pattern, if you look at it, hardly 7.7%, right? So low valuation, low free float is usually a beautiful recipe for a crazy gains in the market. So same we saw with even the railway stocks, how the low free float kind of makes these stocks move up like a rocket, right? So these two things, that is low valuation, low free float, and the economy doing really well. So usually what has happened is, like 2016 say 17, economy did extremely well, we went up. Then economy started slowing down from 2018 onwards, you see a big drop. Correct? Similarly, even previously also, whenever there has been a rally, that is because the economy was doing extremely well. And now, because this decade kind of belongs to India and the economy is doing really well with high interest rates, and when the other economies are struggling, people are feeling that, okay, this economy can continue doing well for the next 2 years. So if that happens, then these PSU bank players, right, those can keep on making very good profits until the economic growth lasts, right? Once it starts to kind of flatten out, that is when the whole NPA problem, because the lending here in most of these banks are not that great, right? So NPA problem, all that will start eventually. So it is not a great long-term bet, I would say, the PSU banking stocks, but you can play the momentum as long as it lasts, and as long as the stock is in, I mean, the index is in stage 2, the stocks are in stage 2, continue playing the momentum, and you should make decent money in these stocks in the next 1 to 2 years. Okay, so this is about the PSU banking stocks, and even it is not really that late. Probably if you can look at the charts and then understand, okay, this is the risk, this is the reward, then probably the risk is little, the reward is pretty high even in the PSU banking stocks. Hopefully this helps. Thank you.